Okay, so really a short video today. Last couple of days, as the start of the Q4, we had this pretty good bounce in the S&P that faded today. So why the bounce and why it faded? A couple of reasons. I mean, people really in the Wall Street respect the seasonality. That means the September is a worse month, and if there's a sell-off, then exacerbate that, and basically more people will pile on to sell. If there is a seasonality favors the buying, which is Q4, usually following the October earning period, we will see there is a November and December during the holidays and the Christmas time. Usually it's a buy time for stocks as well. So Q4 starts, there's a lot of negativity. It ended with the Q3 in a way on September 30th when the stock made their new year low at 3589. So definitely the sentiment shift was overdue, and right on the Q4 first day of the stock trading on October 3rd, we had this bounce, quite a bit, 2%, 2.5% bounce that was followed again on Tuesday with another 2% bounce. Then everybody started shifting their narrative that, hey, the bounce is here, we're going to see S&P going to 4,000, and one person even said that by Q1 next year we're going to be at 4,400. I don't know how people can have that sort of visibility with the exact timeline, but I think their perspective was that it's seasonality and then a lot of negativity and positioning, so people would be thinking about missing out. The FOMO will come in, and they will pile on, and they'll buy with both hands. I mean, that would have been true last year, but this year when you have this total cloud around about this when Fed is going to stop and hiking interest rate, that is front and center. So what do? You look up for directions in the bond market. And I said, you look up in the next video, like in the playlist, there is a video I uploaded yesterday on October 4th about how the 2-year is correlated with the S&P. And every time 2-year yield made a peak, the same day or the following day, S&P sold off. And every time 2-year had a significant down day, S&P started going up, and it peaked the 50% retracement but on the August 15th to close to testing the 200-day moving average that happened on August 15, when the 2-year was actually at its lowest in the last and since then 2-year started bouncing back, just aligning with the Fed narrative that they're not going to pivot or not going to pause. So just as the investors are looking for when to start buying, they would be looking for, am I buying at the bottom or close to bottom, or there is a way more downside? And I published few videos that 3,500 is a good bottom, at least for this year. We're not completely there yet. We bounced back from 3,589. But there are a couple of more resistance. One is at 35.48, and another is, or you can say support, 35.48, and one is at 34.95. So I'm thinking that 34.95 probably would be around the year bottom, but that hasn't happened yet. That could happen if we see there is this, really bad earnings season for the tech specifically that will bring the Nasdaq down. There are a lot of tech earnings coming up on November 3rd and just before the week before. So if the tech earnings really shows that no promise and further growth regression, then I think that we're going to see there is a capitulation, and that will happen in the first week of November, and we might retest that the 3450 or 3489 and go down to 3450 or 3400, and when the buying will start. The other thing that might, between now and then that can happen, if the CPI print comes out okay and it's in 7 handle right now, the expectation is 8.3 that is coming out on October 13th. If it is below 8.3, then means that, Fed may not be hiking another 75 basis point in the October and at the November 1st week meeting. And they might go down to around maybe 25 basis point increase instead of 75. That would be a good thing for the stock. And also, if it is a 7 handle, then the stock will definitely stock market will go higher. So if the CPI print comes out to be 7.9 or 7.8, then obviously this will indicate that inflation has peaked and Fed will pause, or Fed will hike around 25 basis point maybe, not 50, and that way that means that that the 2-year would go down significantly at that point. Instead of 4.1ish, which is currently it is the yield is 4.1, it's going to go down to probably around below 4, and that means that 10-year is also going down, as it will actually maintain the same spread. If the 10-year does not go down significantly, like around 3%ish, then stock will go up. But as we go towards that, the immediate knee-jerk reaction after the 10-13 CPI, that 2-year goes down below 4, 10 years goes down below 3.5, the spread maintained around 0.5, and everybody is very happy that your stock PE, the multiple will go up. So in that case, the stock, even though the earning is not great, the multiple is up, so S&P will be up. It'll be touching base around 3,900, as it will price in a 25 basis point, like a Fed hike for the rest of the year. But as this, the stock market sort of goes towards the November 3rd Apple earning and other significant earning, as well as a Fed meeting for the next rest of the year interest hikes. At that point, if the 10-year goes further down, then again there'll be talk of recession and stagflation, and then along with the Apple earning, it will probably sell off. The market will sell off just before the Fed meeting happens, or around the week of the Fed meeting happens. That means that market will anticipate that the spread is too high, there's a recession coming, the 10-year 2-year spread is too high, that means the recession coming, and as well as it will anticipate around the time that November 3rd week to November 10th, that we will have a stagflation, because all the earnings will show significant regression in growth. So all in all, this will continue for another couple of weeks. Market will probably revisit that 3,500 for 890, and maybe it'll go down to 3,550, worst case 3,400. But then probably the seasonality again will kick in around the Thanksgiving holidays or beyond, because the volume will be very low. And the holidays will start, just what happened in August. And guess what? Then the S&P will bounce. There will be not too much of the peer pressure, and S&P will probably bounce back to 3,700 level, and will continue on that for another a month or so in the first quarter, and before the January earnings season starts. It's going to probably revisit the 3,900, but I do not see a way that S&P will go to 4,200 or 4,400. That is going to be really stretch goal. So yes, right now is a great trading time. If until the CPI print happens by the next week, I think that we will be looking at probably 3,800, 3,805 is a good resistance. So between now and 38 by the October 13, market will hover around 3,700 and 3,850. Then after the October print, it might go up. October 13, it might go up to all the way to 3,900. And by the November 1st week, again, go back, test first or second week. There's a violent sell-off. and that will take the the S&P down to again 3,500 before the year-end buy-in again happens. So that's kind of the narrative. That's kind of the framework. To pick your stocks and trade around that range. Right now, today, the Meta action looks really good. I'm worried because I have long positions in Meta. It looks like it's going towards 120. I just hope that before the CPI, it actually goes to 145 so I get a chance to sell my positions. Yesterday it went to 142, but there is a surprise element. I mean, the Instagram and the Facebook and usage, it's still pretty significant. So there is a possibility of surprise. And just before the earning of the Meta, which also aligns with the Apple earning on November 3, we might see the market, along with the market, the Meta stock goes up and touch 150, maybe even 155 or 160, who knows. But I'd be surprised if it goes to 150, 55. I think there'll be strong resistance at 150, and I'll be happy if it touches that position by the end of October, and I'll definitely sell off at that point. So yeah, Meta is something I'm worried about. But if you look at the Nvidia, if you look at the chip stock, I think they're bottomed. I don't see that, with the rest of the stuff. Chip stocks will go down in November. With the rest of the stuffs will, especially Apple will bring down the market after November 3. But if right now is a really good trading range for chip. So if you want to, sell put or even buy outright, AMD, Nvidia got, sold off today in the morning, but again got bought back a couple of hours back. So I think it is in that range of 131. It might go to 140, but that will be the huge resistance for the Nvidia at that point. But look at Broadcom. It has actually went down to 460 level. Every time it went there, it bounces back to 520. I think that is where it's headed. Qualcomm also got sold off and it reached 113. Now it's trading around 121, 122. It is probably going to go back to 128, 130 level. Until the Apple sell-off happens. It's truly correlated with Apple. So overall, all in all, I think there is a great trading opportunities for the chip stocks. Use this opportunity for that. But rest of the service and cloud stocks, you can choose some of the cloud stock like Snowflake and Cloudflare or the CrowdStrike. Those are like probably bounded at a $20 range. Net or Cloudflare is around probably between 60 and 75, whereas CrowdStrike between 170 and 195. Snowflake probably will totally peak at 195 to 200. But rest of the stuffs in the tech area, stay away, I would say. I cannot tell you a lot of the discretionary except Lulu. Lulu might be touching 320 between now and November. Could be 330. Lulu is a good one. Look at Nike. It's probably going to touch again 105, very close. But rest of the other discretionary, apart from the Nike and Lulu, I'd stay away. Maybe we can look up at for the rest of the items. I stay away from the energy. I don't like energy, but apart from the discretionary, what else I can suggest? Probably stick to these 5 or 6 stocks. Watch the price actions and keep in mind the framework I just mentioned for the S&P, and happy trading.